Hi, so I pondered the question quite a bit recently of how far can this dip actually go. So this is the long-term Bitcoin chart if you haven't noticed yet, so since the beginning of 2010 on a logarithmic scale. And if we look at this top over here, there seem to be some similarities, right? And last time when we peaked, we fell more than 80%. So if we were to fall again 80% or so, we would look at 11,000 in the price of Bitcoin. But nobody talks about this yet, right? Everybody thinks we will just go up again from here. Now, I'm not so sure if we're really gonna go up from here again that quickly, but the question is how far can we actually fall? Now, here are two lines I like to draw. Some people have a logarithmic regression and then have some boundaries around the logarithmic regression and try to determine the trend this way. These are just two random curved lines trying to connect those dots, so both for the tops and for the bottom. And so if we just look at this range, we wouldn't look at like 10 or 11,000. We would maybe look at, say, 13 or 14,000, depending on how quickly we drop from here. So there's already a bottom that's higher than what we had previously, right? This was an 80% drop. We wouldn't drop 80% with that support line unless we are really going to drop very quickly just in the next weeks. But such a crash, I think, is relatively unlikely. Now there's another very nice support line, not just by connecting these dots, but what we can also look at is the 4-year moving average, because historically this was also a very good support. The price basically never went below the 4-year moving average. That's this line here in red. And so if we take this as our support line and we say, okay, let's try to imaginarily extend this line somehow. Now we are looking at a maximum drop that's way less. Maybe 18K, maybe 19K, something in that region. Another indication that we're probably not going to see this 80% drop is how this peak actually happened. If we look at prior peaks that had these 80% drops, right? Like over here, for example, we got down around 80%. So that was in 2013-14. In the recent crash of 17-18. If we look at those two peaks, we can see that the trading volume during those peaks were really high. So excitement for Bitcoin was really high. Same goes for here. Trading volumes got really high, and then when we fell, trading volumes fell as well. And so the price was only very briefly at these elevated levels, right? It went down fairly quickly afterwards. We only had 1 week here where we actually reached these 20K. But the recent price peak was different. We stayed at this high level for a prolonged period of time while trading volumes were pretty low. So this high volume day over here was actually after the crash. But we didn't have high excitement about Bitcoin at these elevated levels. And so this peak over here looks much more like this peak over here where we went up, we made our approximately 3x from the bottom. And at the elevated prices, we didn't have particularly high trading volume. So let's compare those price movements. So if we assume that this peak over here is similar to this peak over here and we overlay the patterns, we see something that is also very interesting, very similar. Again, a bottom at around 17, 18K. Now I feel the whole sentiment during this crash is very different to the crash in 2017. For example, look at Google Trends, the search term Bitcoin. Searches for Bitcoin were spiking at the end of 2017 and then crashed down and stayed low. This time, searches spiked at the beginning of January, where Bitcoin was trading at around 38K. But since then, it's not really going down much, right? There's still a lot of interest in crypto. People are still searching for Bitcoin, are still searching for altcoins to invest in. So there's not anymore this hype and subsequent crash. And so when interest stays high, I would be surprised if the price can really go down as much as it used to go down. There will probably be more buyers that will scoop up more of those coins earlier. And so in other words, I think it's a very reasonable assumption that we are not going to hit this lower trend line here. I think there's a lot of indications to dismiss this line. And so let's just do that. And so how do I currently navigate this market? Personally, I'm already quite heavily invested into Bitcoin. So in order for me to expand my position, I would really have to see lower prices. So I wouldn't be mad if the price suddenly shoots up from here because I do have enough Bitcoin. But if that doesn't happen and we continue going down, I am likely to be heavily invested once we reach this 4-year moving average. I'm inclined even to buy earlier simply because of this increased interest over here. So one potential way to approach this is by looking at faster moving averages. Here in light blue we see the 3-year moving average, and this was historically speaking a very good time to buy, right? So between the 3 and the 4-year, we had a really good accumulation zone. Buying through that time would have been really good, and this holds true for the time after the Mt. Gox crash. It also holds true after the ICO crash, and here the Corona crash. Now I'm not sure if we're actually going to reach this again and if we're gonna move over here. So I'm almost inclined to start DCAing in already once we go close to the 2-year moving average. And so let's just try to extend this line somehow. This is obviously not exact science because we simply don't know the future prices that will be averaged, but it gives a certain tendency. And so just by looking at this, I'm probably going to start averaging in again once we are somewhere around 24, maybe 23K, depending on how quickly it falls. One thing I will definitely check is trading volume, because in general, if we get a sharp decline with increased trading volume, we do have the potential for a reversal. Doesn't have to happen, right? It didn't happen in May of this year. So we had the sharp decline with the increased trading volume. We didn't directly shoot up afterwards again, but very often this works. When trading volume increases and the price drops, a new reference price is established, and then usually the price can bottom around that time. This is also what happened here during the Corona crash. Now the problem with this recent crash over here is that after this extended trading volume, we didn't see subsequent weeks with high trading volume. And that's a problem, right? You want trading volume to continue to be high, at least for like 2 or 3 more weeks, to see that there are really a lot of people scooping up those coins and establishing this as a floor. But that's unfortunately not what happened here. So I'm still waiting for the price to drop further. If you enjoyed this video, feel free to give this a like. If you're not yet subscribed, now is the time. I publish videos 2 to 3 times every week. If you've got Telegram, you can join our group as well. The link is in the video description below. And last but not least, there's also a group in Facebook, or you can decide to follow on Twitter. See you next time. Bye bye.